Hello class, this is Demetrius Wilson with Chapter 9. This is part 2 of the lecture. Hopefully I can wrap it up in 2 parts instead of 3, like I have the last 3 weeks. What does manufacturing overhead budget tell us? It provides us with an estimate of all production costs other than direct materials and direct labor, being consistent all throughout the book, necessary to achieve a desired level of production. Overhead costs are usually separated into variable and fixed components. Total variable overhead costs are calculated by multiplying units to be produced times the variable cost per unit. And total fixed overhead costs are given and do not change with the changes in production, right? So my lease payment for the building does not change. All right, so here's the manufacturing overhead budget for Jerry's Ice Cream. So you see the units to be produced is always the guiding factor all the way at the top. But you see indirect materials at 15 cents per unit, indirect labor at 10 cents per unit, and other at 25 cents per unit, right? So you multiply those, get the number. So then you have your total variable overhead costs, your fixed overhead costs, which are salaries, rent, depreciation, and then you have your total overhead costs you deduct for your depreciation. All right, and then you have your cash payments that come out for overhead. Roll up the entire thing, do your division, and you come out with a manufacturing overhead per unit of $1.20, right? So if you look at the legend, it tells you exactly how you came to the $1.20, and also you can see it in example throughout the book. So I'll let you look at that on your own. What does a selling and administrative budget tell us? Well, this is the money that we pay to individuals in human resources and in marketing and in sales. So salaries, $40,000. These are all going to be the same across the board. Rent, advertising, depreciation, other. Total selling administrative costs. Deduct your depreciation, and then you have your cash payments for selling and administrative. It doesn't bring money into the company, but it's definitely necessary. So what does a budgeted income statement tell us? Provides an estimate on the organization's profit for a given period, right? And we need to know how much they made within certain periods. It's typically prepared using the accrual basis of accounting. It is often most carefully scrutinized component of the master budget, right? So they're all over this. And it is used throughout the organization for planning and performance evaluation, right? So you plan, you control, and then you evaluate and see how things are going. So there's a budgeted income statement example for Jerry's Ice Cream. And like I said, you always read this legend that you have right here on the left-hand side. But your sales in the first quarter, 240,000. You deduct the cost of goods sold, 180,000. So your gross margin is 60,000. Well, if you're splitting that amount with someone else, you may have a problem with that being your totals for the quarter or for the year. Then you have $58,000 of selling and administrative costs. So your net income is $2,000. Second quarter is 14, third quarter is 32, and fourth quarter is 20. Why is it 32 in the third quarter? Because those are summer months, and that's when everybody wants to buy the ice cream. So per unit cost, you see down there for direct materials is $2. For direct labor is $1.30. Manufacturing overhead is $1.20. So total cost of goods sold per unit is going to be $4.50. So what does the capital expenditure budget tell us? It just tells us, hey, we've got big purchases. We got to purchase a copier. We've got to purchase a facility, and that's what we need to do. And hopefully it garners a return on investment. It provides an estimate of long-term assets to be purchased during the budget period. It presents purchases of tangible assets like property, plant, and equipment, but it also presents intangible assets such as patents, copyrights, and trademark things that are definitely important. So here's an example of our capital expenditure budget. You see that we just have some computers for selling administrative, right? And then we have $15,000 in production equipment. That's all that we have wrapped up into the fourth quarter of that $25,000. So what does a cash budget tell us? It provides an estimate of the amount and timing of cash inflows and outflows of the budget period. It has 3 sections: cash collections from sales, right? So how much money is coming in from sales. Cash payments for purchases of materials, how much money you paid out to get the materials that you need in order to make your product. And then other cash collections and payments. So main thing that you have to pay attention to on the cash budget is that if we say we owe you $200,000, that doesn't mean that we're going to pay that entire $200,000 amount in the first quarter. As you see, it's first quarter $240,000 in sales, only $144,000 was provided within year one, or I'm sorry, quarter one. Then that other 96,000 shows up in quarter two, and so on and so forth down the line with these. When you look at the actual cash budget, so total cash collections 324,000 for the first quarter, 268 331. So you just do your addition all the way across the board. Um, and so down here you have your cash payments for purchases of materials. So fourth quarter prior year, that's going to be assumed. First quarter, 84,960 purchased, but you see only 59,000 is there, and then 25,004 or 88 is there. And I like their example because it's realistic. No company gets paid all of their outstanding debts, before the month's out. They usually have a, kind of like a different staggered period, and where companies doing business to business actually have to pay. And that's just the bottom part of it. So when you look at it, look at your book, read the legend right there. That'll help you and walk you through the actual problem. So we had this on the top of the other slide with the 153 there. So these are total other cash payments, right? You see as you go through that where each one of the numbers go to, and you can kind of connect the dots and go from there. Much easier when you see it just in the book with with the entire thing being on one page. So what does the budgeted balance sheet tell us? It provides an estimate of the ending balances for all balance sheets accounts. Managers use this to assess the impact that the budgeted sales and costs will have on the financial condition of the organization. And that's definitely a valid point to stick behind. As a final step in preparing the actual master budget, and those things are very tough. So budgeted balance sheet, you have you look at that on your own. Also, you can read the legend, but all they're doing is they're saying they're balancing the total assets and total liabilities and shareholders' equity. Right there, we still both have the 850,000, 176. So they do definitely tie. They do definitely balance. You want to describe the operating budgets for merchandising, service, and not-for-profit organizations? Well, kind of the same. You just don't do any production, which makes the whole equation kind of quick. So what do operating budgets look like for merchandising organizations? Merchandising organizations purchase finished goods, right? They don't have to construct the goods. They purchase finished goods and sell them to the retail or wholesale customers. Since they do not make goods, they do not need production or production related budgets, right? So you go ahead and cross that out. So merchandising companies utilize uh, a merchandise purchases budget. Merchandise purchases budget estimates estimate the unit of merchandise to be purchased and then the cost per unit. So in this how it looks, merchandise organization budget schedule looks just like the one that we went through for actual manufacturing. So sales drives all of the budget. Starts with them, and then hopefully they did a good job of of predicting where we will stand. So what do our operating budgets look like for the service organization, right? So I've always worked in a service organization. So focus is on projected sales revenue from services provided and the labor necessary to achieve sales revenue projections. So service organizations do not need production or merchandise purchase budgets. So what do operating budgets look like for the not-for-profit organizations? Well, not-for-profit organizations such as churches, charitable organizations, and school districts also use budgets for planning and controlling purposes. Budgeting is critical for these organizations because the approved budget often serves as the legal authority uh, for expenditures. So you want to understand issues, ethical issues associated with budgeting, and one of those ethical issues is that hey, so with the ethical side is that hey, my bonus is short term. It's within a year, and I'm going to do this because it's for the short term health of my pocketbook. And although I know that it's, long term it's going to be bad for the company, I still do it because I'm attempting to look good and get my bonus for the year. So why do ethical issues arise during the budgeting process? In planning phase, organizations are most concerned about getting accurate estimates that lead to positive results. The control phase requires evaluating performance by employees by comparing actual results to the operating budgets. Employees must often decide between doing what is best for the individual or what is best for the company. So, for example, manager's compensation is tied to achieving budgeted profit on a quarterly basis. They may be inclined to set the budgeted profit as low as possible. Organizations must have processes in place to ensure that employees are rewarded for meeting the goals and setting accurate estimates. Well, that's it. Got it done in 2 lectures instead of 3. As always, have a good day and a great week. Hope to see you in future classes. Everybody's been, very successful in going through the chapter and doing a great job of learning. So if you have any questions, as always, feel free to shoot me an email and I will respond as quickly as possible.